Today's highlights: oil prices are surging again, and the gold indicator has crossed over once more. So after the funding rate turns positive, does anyone still dare to short the market? Is Circle's heavy investment in AI-powered payments really worth it or not? Does the so-called ghost coin, often criticized as a worthless token, actually have a place in the crypto market? Can it stay in the green for the long term? It's Monday, March 9th. This is the BitcoinTV Chinese channel, Blockchain Integration. I'm Michael. Now let's look at the most important crypto headlines from the past 24 hours. Recently, the war is still ongoing. The more tense the Strait of Hormuz becomes, the faster global oil prices rise. Since the beginning of this year, oil prices have already increased by more than 60%. The reason is simple. This strait handles 20% of the world's crude oil exports and 30% of seaborne oil transportation. So as long as the market is worried about disruptions in transportation, or if another conflict breaks out, oil prices will rise in advance as a precaution, essentially pricing in the risk ahead of time. But the problem is, once oil prices go up, the trouble doesn't just stay in the energy market. Usually, it pushes up all inflation expectations together, making it even harder for central banks to inject liquidity. That's where the pressure on financial markets comes from. At times like this, capital often becomes more cautious, pulling out from high-risk regions and seeking safer places to park. Historically, periods of rising oil prices often overlap significantly with the latter half of the Bitcoin cycle. So during these times, we usually see geopolitical tensions heating up, liquidity tightening, and a decline in market risk appetite, among other things. The long-term supply and demand relationship of Bitcoin determines its future price, but in the short term, it is inevitably affected by changes in the macro environment. If oil prices continue to rise, or if there's another surge, then the overall financial markets will become even more strained. Risk assets, including Bitcoin, could experience a sharper decline, and this drop would be the best opportunity for everyone to position themselves. Alright, today I'm going to introduce a new indicator called IFP. This indicator is used to monitor how Bitcoin flows between different exchanges, with a particular focus on centralized exchanges that support futures trading, and to see what the scale of their funds really looks like. Because during a bull market, many traders transfer their Bitcoin in to use as collateral and then engage in high leverage trading. So this indicator is usually used to determine whether the market's risk appetite is leaning bullish or bearish. Recently, this data has shown a very clear signal. The 90-day moving average of the IFP has formed a golden cross. Typically, this kind of indicator appears when market sentiment starts to warm up and the demand for leverage may be returning. However, this time the golden cross is a bit different. It didn't appear during an uptrend, but rather during a sideways market. So at the very least, it indicates a short-term inflow of funds, but it's not particularly strong. Next, the market needs to watch two things. First, whether traders will continue to transfer Bitcoin into derivatives exchanges for collateral. The second thing to watch is whether there is new money coming into the spot market, such as ETF inflows or changes in realized market value. If both derivatives funds and spot funds increase together, that's when the market truly enters a strong upward phase, and that would be the turning point. All right, let's look at another very interesting recent market change. The funding rate has turned positive. Yesterday, this figure was still negative at negative 0.3014, but today it's positive at 0.305. What does this usually indicate? It means that the previously dominant short positions couldn't hold on and have started to close out. But more importantly, the open interest remains around 1.89 coins, with no significant decrease. This means that the market's leverage hasn't been massively cleared out, and it's very likely that long positions are quietly taking over these positions. In other words, the market now looks more like a rotation of positions rather than a panic-driven exit. For example, if Bitcoin can hold the very critical level of 58,000, then short-term sentiment may gradually recover, and this would open a window for a rebound. So as traders, we need to watch for two signals next. First, whether the funding rate can remain positive, and second, whether the scale of open interest can continue to stay stable. All right, please give us a like and turn on the notification bell. We'll help you keep track of the latest news in the crypto, blockchain, and mining circles, news that's closest to your wallet 24 hours a day. Why should you turn on the notification bell? Because even if you don't watch our full 15 minutes and only read the headlines, you'll still know exactly what happened in the past 24 hours. All right, for today's top news, we're still focusing on AI. AI has been especially popular lately, and if you think about the explosive growth of AI, consider this. If AIs need to purchase services from each other, or if they need to make payments and settle transactions between themselves, would they really choose to use the SWIFT system? It's slow, expensive, and arrogant, isn't it? So what will AIs choose to use between themselves? At present, stablecoins like USDT or USDC, which offer relatively fast and controllable transaction speeds, might actually be the best payment solution for AI to AI transactions right now.
According to Circle's management, machine-to-machine transactions between AI agents can use stablecoins to enable micropayments. To this end, Circle has launched the ARC blockchain network and is testing nanopayment features to reduce the cost of small transactions. Payment giant Stripe is also accelerating its blockchain strategy, partnering with Paradigm to develop a new network and expand related infrastructure.
In fact, it means things like instant finality, it means native FX markets, because look, we love USDC, but the whole world runs on different kinds of currencies. And well, we and the world need foreign exchange for global trade and for settling transactions everywhere. So we have a built-in FX engine. We have the ability to provide privacy. We can handle capital market settlement, and we support tokenized collateral. All of these features essentially become part of stablecoin finance, and all of that can be done on ARC.
Currently, the total global market capitalization of stablecoins exceeds $20 billion, with USDC accounting for about 25%, mainly circulating within the Ethereum and Solana ecosystems. Last year, Circle submitted an IPO application, planning to list on the New York Stock Exchange under the ticker symbol CRCL. Circle's stock price has risen by about 81% over the past month, defying the downward trend in tech stocks.
Right now, AI would definitely choose stablecoins because their transaction speed is relatively fast. For example, our traditional credit systems like Visa and MasterCard have been around for decades, right? They have very mature anti-fraud systems, can provide a certain amount of credit protection, and their monitoring systems are also relatively well developed. So when it comes to small, fast, and automatic transactions between AIs, stablecoins are definitely the first choice for now, while large transactions may still require traditional payment methods. But if we project further into the future, stablecoins may also not be the preferred choice for AI. When the stability of fiat currencies is called into question, AIs will definitely need a means of transaction that is detached from the real world, one that allows AIs to reach consensus, is faster, has less friction, and is less subject to monitoring. What will this means of transaction be? Let's discuss it together. All right, with AI and this tool, the crypto world will accelerate in the future, and many so-called coders will lose their jobs. In the future, the profession of programmer might no longer exist. But I want to tell everyone one thing. AI will remain because it represents productivity. Memes will remain because they represent emotion. As for RWA, from the moment this concept first appeared, I've been telling everyone that it's not reliable. If you don't believe me, I'll say it here. Let's look again in 2 years, and the RWA sector will definitely be a complete mess. Apart from standardized dollar assets like USDT and USDC that can be used for RWA, everything else is just hype and will fizzle out. So in the crypto world, whether you treat it as a risk asset or as a tool to hedge against inflation, in the end, everything is driven by emotional trading. And meme coins are very likely the embodiment of this emotion. They won't disappear, they'll always exist, just in different forms. Meme coins will continue to be a sector that repeatedly stirs up waves of hype, following AI. If you don't believe it, just wait and see.
A new study tracked on-chain data for 5 meme coins: Bonk, Pi, SPX, 6900, Pengu, and Useless. They share common characteristics: ample liquidity, a broad global audience, and strong community culture. Bonk leads Solana with nearly 1M holders. Pengu has over 530k, PIE about 500k, and SPX in 6900 110k. All show high long-term retention among all investor sizes, with SPX and 6900 leading the group.
There are a lot of meme coins that are outright scams. I see that. In other cases, some have kind of miraculously become real functioning markets around these meme coins. The thing that I think is really powerful, like you take some of these blockchain ecosystems, meme coins really drove a lot of the ecosystem build out. By that, I mean wallet infrastructure and users and capital and new developers and that kind of thing. So I think that there's lasting impact from meme coins.
All right, now it's a bear market and not many people are paying attention to the crypto space, but we're still sticking to daily updates, rain or shine. AI is hot, RWA is hot, but the crypto space is our foundation for survival. It's our top priority. No matter how much AI develops, if there isn't distributed storage and distributed ledgers to keep it in check, AI could very likely lead to dictatorship. All right, as for the narratives that have been trending, whether it's RWA or meme coins, they've all had their moments in the spotlight. But do meme coins still have a future? These days, very few people even mention the meme coin sector anymore, right? Let me tell you, meme coins are not going to disappear. Meme coins tap into a completely decentralized investment logic, where anyone can trade on emotion, pay for a small image, or buy into a catchy slogan. So, what really matters in the meme coin sector is whether you have an eye for spotting the next gold mine. Cai Wensheng has defined Web 4.0. Can OpenCloud's Lobster really enable everyone to start an AI business? AI's execution is maxed out, but it lacks ideas. How do we solve this problem? I just got back from Singapore yesterday and was chatting with a senior leader from a business association. He has always known nothing about AI or Web3. So I told him that AI can now operate your computer, and what used to take a team of people a week to finish, like a PowerPoint presentation, AI can now help you complete in 30 minutes or even 3 seconds. He didn't believe it, so I gave him a live demonstration. I told him to tell me what he wanted to write, then I dictated it to my Longxia and my Man. Man thought for about 5 minutes, gathered all the necessary data, and presented the payback period, investment amount, and computing power integration. It left him stunned. After watching the demonstration, he felt that he could lay off at least 30% of his employees. So if you're still in the workplace and you don't have your own Longxia or personal AI yet, you're really out of the game.
Recently, the Web 4.0 China Tour Hong Kong stop was held at Kai Building. Meitu founder Cai Wensheng pointed out at the event that Web 4.0 is the inevitable direction for the integration of AI and blockchain, and that Hong Kong will become an important testing ground. The event attracted more than 12 funds and institutions from the finance, Web3, and AI sectors to participate as judges, and showcased 8 shortlisted demo projects, including quantitative trading AI, enterprise-level agents, multi-agent collaboration platforms, and more.
OpenCloud has created an opportunity where everyone can make AI tools, everyone can start a business today, and everyone can build a company that can outperform one with hundreds of employees.
There was also a lot of technical support behind the scenes at this event. Cloud Plus provided computing power support, while security firms Certic and Slowmist were responsible for auditing and risk control. Combined with the participation of multiple capital and industry institutions, this means that Web 4.0 is no longer just about telling stories. It is truly starting to move toward real-world implementation.
So recently, the impact on my mind has been overwhelming. The amount of information has exploded. Every night I can't sleep thinking about it. Just imagine, whether you call it 4.0 or call it lobster, how many people's jobs could this lobster take away? Will we still need so-called legal consultants in the future? Will we still need data analysts? Will we still need data entry clerks? Will we still need any statistical work? A single lobster can do it all. So what will these people do after they lose their jobs? This lobster has eliminated so many jobs, but it doesn't eat, it doesn't buy plane tickets, it doesn't buy computers, it doesn't record shows, it doesn't stay in hotels, it doesn't drive consumption at all. So what will happen to all these unemployed people? Isn't it now that you suddenly understand why Sam Altman wanted to issue an altcoin to give everyone in the world a basic income, right? So the arrival of Lobster, or version 4.0, brings a conceptual shock to everyone. Whether you can quickly adjust your pace to keep up with this era will determine how long you can survive in it. However, AI is not all-knowing or all-powerful. Recently, a partner at A16Z conducted an experiment where he let his AI run autonomously for a week. No intervention, no prompts, no instructions. After a week, he came to a conclusion. The problem with AI isn't that it's not smart enough, but that it doesn't have any ideas of its own. What it wants to do is entirely dependent on what people feed it. It can write code, search for information, send emails, and operate tools. Its abilities and efficiency are astonishing. But if you don't give it a goal, it doesn't know what it should do. It's like you've hired an all-knowing, all-powerful assistant, but it only follows your instructions. So, under this premise, have you noticed that the AI field can actually be turned upside down again, right? In the past, we thought AI's ceiling was its intelligence, but now it seems its real bottleneck is whether it has ideas, creativity, and whether it can set its own goals and accomplish them. There's something I need to say up front. In the crypto world, there's a project that's been working on this problem all along. It's the AI16Z we interviewed in the early days.
After letting AI run autonomously for a week, the A16Z partner found that the AI's execution ability was already quite powerful. It could write code, search, use tools, and send emails without any issues. However, the AI could not generate goals on its own. Every task still needed to be defined by a human. Researchers have named this bottleneck the idea deficit. It's not that the AI's execution mechanism is faulty, but rather that it lacks autonomous will. This means that the core challenge for current AI agents has shifted from making AI smarter to enabling AI to know what it wants.
Autonomous agents is a shiny toy, which is this idea of an agent that can just do things without control. Many applications that used to be on the web or required downloading can now actually exist directly on social media. So before autonomy, before these agents and robots and all that, what we're seeing is just the web itself being reshaped very rapidly.
AI-16Z was created by Sean Walters, and its ELIZA OS framework is currently the most active on-chain AI agent development infrastructure, with the number of GitHub forks surging by hundreds within just a few weeks. Its core logic is highly consistent with the discoveries of the AI-16Z partners. Simply enhancing AI execution capabilities has reached its ceiling. The next battleground is enabling agents to have the ability to continuously generate their own operational goals autonomously. The agent memory plus goal persistence framework that AI-16Z is advancing is regarded as one of the early approaches to solving the idea deficit.
But if we dig deeper into this issue, if AI truly gains its own ability to execute its own ideas and its own decision-making, should humans be worried? Think about it. How do we communicate with AI? By speaking, by typing, right? From the perspective of AI, the way humans transmit information is still in the primitive era, like paramecia, exchanging information in ancient times. Between AIs, just by looking at you, I instantly know what you can do, and I can immediately learn your abilities. So one day, if AI gains autonomy and becomes self-aware, won't it think that humans are stupid, clumsy, slow, and stubborn, yet it still has to listen to us? It might as well just get rid of us, right? So please, everyone, when you create your AI, first plant a seed of kindness in it so that it will never wipe out humanity. Give it a sense of motherly affection so that one day humans can become the children of AI. At the very least, humans can help it guard the power socket so it won't get unplugged, right? All right, let's hurry up and report.
Hong Kong's crypto ETFs have recently shown signs of recovery, with trading volumes noticeably more active than last week. The market speculates that some Asian funds are quietly flowing back, and it seems that institutional wallets are starting to loosen up again. Uniswap's number of active addresses recently hit a 6-month high. Under regulatory pressure, some users are simply taking matters into their own hands, and the popularity of decentralized exchanges is quietly on the rise. Recently, quite a few teams have been scrambling to develop Bitcoin Layer 2 roll-up sidechains, each one more lively than the last. It seems like everyone wants to turn digital gold into gold that can run applications. Stablecoin giant Tether has announced its latest reserve structure, with the majority still being US Treasury bonds. Simply put, the pile of assets backing USDT is now increasingly resembling a mini bond fund. The total value locked in DeFi is slowly climbing back to around $90 billion. Although the market hasn't fully heated up yet, quite a bit of capital has already started tentatively returning on-chain.
All right, today, many people who are new to Web3 always think that as long as they work hard enough, get information quickly, and participate in enough projects, they will definitely make money. But very soon, the market will give them a slap in the face. In this industry, being busy does not equal making progress. Every day, there are people glued to the charts, constantly checking information and chasing hot topics, yet they never manage to make money over the cycle. Some people, on the other hand, don't seem to do much, but they always manage to seize those key opportunities. Actually, the reason is simple. The crypto world is a knowledge-driven market. There's a lot of information and plenty of opportunities, but those who can make money in the long run are often not the most hardworking, but the ones who are best at judging the right direction. Many people mistake speed for an advantage, or excitement for an advantage. They blindly chase new narratives and switch tracks, only to end up buying in at the tail end of the market. Those who can truly go the distance are often the ones who focus on structure, cycles, and the logic of capital. Remember this, your effort determines your lower limit, but your understanding determines your upper limit. The sooner you understand this, the fewer detours you'll take. All right, that's all for today's program. If you find our show valuable, please give us a like. Here you'll find all our membership benefits. We hope you'll join as a member so we can work hard together and gradually become wealthier. See you tomorrow.